This is Terrence Andre Banks with Information Age Financial Solutions, coming today talking about real estate investments and real estate investment platforms, in particular Rich Uncles, which is now, I'm looking at their site, is now Motive. And just a little caution, something to be aware about, give you a little bit of review, and even my experience. I've actually tried this platform out just for an experience to see how it works and, a little bit about it. Now, Rich Uncles is now Motive, but before it was just named as Rich Uncles, and they had two different investment kind of sites and things that you could do. Now, I'm just going to review the site that they have here, but just talk about my experience before it became Motive. And also something really be cautious about and aware. Now, NerdWallet did a review and gave it 4 out of 5 stars, which will give you the impression that it's a pretty good platform. If you do a Google search, I just pulled it up here, and it's, and it says, Rich Uncle's View 2021 Pros and Cons and How It Compares. Rich Uncle allows you to invest in 45 income-producing commercial properties located in 14 states via a non-publicly traded real estate investment trust. The bottom line, with a minimum investment of $500, Rich Uncle provides an affordable entry for investors looking to expand their portfolio into real estate, investing and potentially earn monthly dividend payments from rental income. But investors should know that 3% of their initial investment goes directly to fees. That's very important to go around there. And again, but even after they give their review, they give it 4 out of 5 stars. I wouldn't even do that because Rich Uncles, even though it hasn't been around long, but they did not really talk about what happened once the pandemic hit and how that affected Rich Uncles as a platform itself. Rich Uncles had 2 different particular platforms you could invest in. For $10 initially, you could invest, and they will allow you to have a cash flow from college campuses and other different, gyms and stuff like that before the Cerveza Sickness really hit on. And that would allow you a cash flow aspect for that. Then they had a separate part which will give you a triple NNN REIT, which was these locations that these commercial properties is suggesting here, that allows you to, where these commercial properties will pay all the different taxes and maintenance and stuff like that, and they will still give you a dividend per se each month. But it wasn't initially, Rich Uncles wasn't as a REIT in a typical sense of a real estate investment trust REIT that you get on the stock market there. They kind of invested in a platform like a private placement, where you would get money into that kind of more of a reinvestment style. The problem is when the Cervezas hit and how much it affected people who had the $10 basis of shares, and they buy them and you share, as they would say, or they were kind of wiped out, and their shares, their value, which let's say was only $100, was reduced down to like $3. If you had 1,000 shares, and then reduced to like 200 or something. I only put like $90, but it went down to $3. And then next thing you know, we're having these issues. We're trying to make through that place, and well, we decided to dissolve it and now create Motive. And then I also put into the separate part of it, which was which they're talking about here, for the commercial properties with the NN REITs, which also went down. It was, if you had $500, it went down to like $300 in your investment. Your returns, they were promising before, about 7%. I wish I could show you here. Went down to like 1% or 2%. And so now they creatively came in, and now we're still the company you know and love, now on a mission to reimagine the real estate ownership. I'll click on their new site, how it works, and you click around there. Tenants pay rent, the REIT distributes taxable income. We set out to pay you cash distributions each month from the rental income our tenants pay. You can buy shares and own a piece of real estate investment trust, whatever. How we select assets that you could view it for, and all of this sounds. Submit your investment request in minutes. When you're ready to set to invest, you can quickly submit your investment request online. If you have any questions, you can contact us for tracking investments. We have You have full visibility on your investment via the Monarch dashboard with the ability to track your current account value and total distributions earned, easily generate account statements, and access your annual tax returns. So all of these things sound good. If I buy shares in offering, will I be able to sell them later? Well, let's see, here it goes. Let's read on that. Shares will qualify for our share repurchase program if they meet certain minimum holding requirements, currently 6 months for shares purchased after February 1st, 2021. Your shares may be redeemable each month, but it's important to keep in mind that this program is subject to certain share repurchase limitations on a monthly and quarterly basis, certain fees for shares held less than 2 years, and the company has discretion to repurchase fewer shares that have been requested to be repurchased in a particular month or quarter, in each case as outlined in our private placement memorandum. NerdWallet says that you can start off with $500, but I believe now their minimum requirement is $1,000. Let's look at, and there they go. They tell you their portfolio. You can download some bond secures, and all these places, especially, seem very secure, and estimated caps at 7.75%, 8%. Rental increase 2.25% a year. But again, this is coming after the aftermath of the virus in this basis and how bad they got. There's so much documentation that they had. And when you put on there and seeing how they perform in these times of crisis, it was a whole different story. They revamped themselves and gave you a much better impression and stuff like that. Not saying you can't go through different crises, but they had 2 investment platforms. The $10 advantage point for people to get in was a lot, well, it was a better cost of entry, but they dissolved that and didn't let you really know about it. And saying when you sell shares, didn't, and just from my experience, didn't even pay you back or let you know that. It just was dissolved and you just potentially lost the money. And then the other aspect of the triple net lease, which they're reflecting here, where they had these kind of returns, 7.5%, stuff like that, based on their portfolio, went from $500 investment, went down to like $320, and instead of a 5 or 6% cap, estimated cap rate return, went down to like 1% to a dollar, and the value of the property, which was supposed to increase, dropped down to about $300. So these are just things that, from just when you actually get yourself involved with these platforms, not a lot of money really wasn't big, a big thing. I'm not complaining about that, but for the average person getting in there, hoping for an aspect for real estate, and giving the impression that you can get a part of the real estate action here, and especially as commercial properties, which sounds great because most people would not have access to that. These are the different warnings and things to be concerned about. The pro forma here, the pro forma meaning that it's just what they're laying out as for their sales pitch, sounds very good. But as you dig further and you might experience some of these different things, it's not as always as rosy as they paint out the picture to be. They're telling you even invest in your Roth IRA. Now, if you had money in your Roth IRA back into the other platform when it was just rich uncles and they had ever set flag before it was Motive, you would have lost tremendously. Sometimes you would have not gotten anything back. And it's just interesting that that's not really shared in that point unless you had experience and been with the company for at least over a year, because this isn't due for 2020. Again, when I decided to do an experiment about it, was about 2000. I think it was, I can't remember because I didn't really pay attention to it that much. Just to be full disclosure and honest, because it was something just as an experiment for $10 each. And I put up about $100 there, and then the $500 for the other platform. So on the total it was $600, and at first it started off good for the first couple months, paying back. But once that, sebaceous sickness came in, everything shut down. It really had a tremendous impact on this particular company, and the way they handled it was, in my opinion, very poor. They try to give you some literature after the fact that once they decided to dissolve the shares on one platform and then decrease the value of the other aspect and lowered the dividend payment out, and really not so much. They would say that they're giving up as much information as possible because of that, and everyone was affected by this, which they were. But how you go about handling it and letting individuals know, especially regardless of the amount, you could have lost big time. So these are just some things to be aware of, because when all of these new platforms come up, and real estate, as they try to scale them, and I'll probably do some other videos in the future about these real estate platforms. Be mindful, do your due diligence, and even if it's low amounts of prices of entry, like in Motive here or another platform, once the real test of character and real test of the metal itself, testing the metal is a term to utilize, comes down when you have a situation that goes on economically, and how they're going to handle it. How's that return going to be? It's not a simple REIT in itself, from my experience, where at least the REIT you have, your shares wouldn't be dissolved and disowned. They might revalue and the REIT and the value just may go down in particular, but you're still receiving, if they're giving you a particular cash flow, the REIT would still pay out some aspects on the typical as for a stock REIT. So be mindful of these platforms. As I said before, do your own due diligence. But my experience with Rich Uncles, which is now Motive, has not been the best, and I would not give them the 4 out of 5 stars that NerdWallet has done. No reflection of that with NerdWallet. I know the company well. I used to work with when I was with Money Management International as a nonprofit credit counselor, a financial counselor. NerdWallet was a good source of good resource for people doing they did real work and did the journalism that was popular. But I think giving them 4 out of 5 stars, they did a pretty good review, and I would encourage you to take a look at it and read through the whole review. I'm not going to read it here because I just don't think a 4-star would. I would give it probably a 2 from my experience in actually utilizing the platforms. Open to non-accredited investors, but some restrictions apply. Highly illiquid investments. They did that for the cons. Unable to choose among commercial properties. Limited investment choices, but that's fine because you're not looking for that. Just the fees are extremely high, and there are other fees as well. But that wasn't my biggest concern. It was really what they're promoting here and how they handled it when economic crisis actually takes foot. So if this video has been any value to you, please subscribe, leave some comments, and do your due diligence if you lose Motive, which is now Rich Uncles. Hit the like button. And to my next video, then I'm out.